What is going on, investors? That is right. We are back again, and that means it is Friday because this is the FAANG Stock Recap Show, where we recap all the news of the week for the FAANG stocks, and we'll go over the stock charts as well to lead you into next week. Eventful week here for the FAANG stocks name. Now, tomorrow, just a programming note, tomorrow I will be back on the Saturday show. I'm sorry, I was at the US Open last week in San Francisco, so no Saturday show, but this week we will have our Saturday show where we talk about crypto, all those types of things on the Saturday show. Let's not waste any more of your time. It's Friday and the weekend is here. Kicking things off with Facebook, started the week at $329, just slid up slightly to $331. Fair amount of news coming out of Facebook and the FAANG stocks in general. A bipartisan group of, I think this is Congress, not the Senate, unveils antitrust reform with big tech in the crosshairs. There's like 4 or 5 bills here targeting Google, Facebook, Amazon, Apple. We've talked about here several times on the FAANG stock show that, look, this is what's going to happen over the next 3 to 4 years. That's all that's going to happen out of Congress, is that they're going to constantly try to attack these companies, whether or not they are successful. I'm not sure. We'll see what happens with these. This is a bipartisan group, but this is Congress, and that operates completely separate of the Senate. And I think it'd be a little bit difficult to get the Senate on board with these types of things, whereas Congress, a little bit different story. So we'll see what happens there. When we go over Amazon's news, I'll have a little bit more detail on the bills there. So Facebook is aiming at a smartwatch in the summer of 2022. It's got cameras on it. Reminds me of Apple Watch, Fitbit, those type of things. I don't necessarily think this is going to be a big revenue driver. I don't necessarily think this is going to be something that a lot of people use, but Facebook is getting into the smartwatch market. We'll see what happens there. Now, Facebook, this is interesting. So Facebook, we talked about, they don't really talk about it here in this press release, but I think, this is just me thinking out loud, is I think what Facebook wants to do is do a little bit more stuff like YouTube does, and maybe like if you think about the Apple App Store and maybe like the Microsoft Store and the Google Play Stores, where they kind of have a rev share where you create an app, you sell it, you make a little bit of money. Google, Apple make a little bit of money too. Here on YouTube, you post videos, some ads play on the videos, the creator gets a little bit of money, Google gets a little bit of money. And I think Facebook wants to actually get into that, where they're actually paying for content, paying for posts, paying for those types of things. And they say that they're not going to take a cut of that money until 2023. And that they say that the rev share will be less than 30% that Apple and others take, like Google and even Microsoft to a certain degree. So I think this will be interesting. Maybe it'll mean that if you're a creator here on YouTube, you make a little bit more money because there's more competition. We'll see what happens there. Moving on to Apple, start of the week at $125. This one's sliding up. We'll see if this gets to the upper end of our range when we talk about the stock chart, but end of the week at about $127 per share. Now, Apple is reportedly in supplier talks with EV battery makers CATL and BYD. Part of the negotiations is Apple wants them to make some of the batteries here in the United States, or make all of them here in the United States, and we'll see if they're able to do this. Now, this is not batteries for the phone or the iPad or a computer. This is for the car, apparently, which Apple appears to be moving forward on. Moving on to Amazon, we could call this like the Amazon show. There's a ton of news out of Amazon this week. Started the week at 3,198 and it had a great week, probably the best week out of all the FAANG stocks. End of the week at 3,346. I don't know if it's tied to the news, but we'll talk about that here in a second. So Amazon Prime Day is forecasted to smash last year's sales record. They did $10 billion in 2020. They did $7.16 billion in 2019. So we'll see what happens with that Prime Day. I know I just sent in 3 pallets to Amazon of stuff, and I'm still working on it. I probably got another pallet that I could send in. I don't think I'll get it in there. The Prime Day runs June 21st through the 22nd, which is like 10 days from now. So there's no way I'll get mine in the warehouses in time and up on the site for sale, but it is expected to be a massive day, so we'll see what happens there. U.S. House bill could force Amazon to divest their private label business. So Amazon's got this private label business. And if you're a seller on Amazon like I am, you hear a lot of things where somebody creates a product and then it goes really well. And then all of a sudden Amazon Basics has almost the exact same product at a lower price. And it's tough to compete against that. And I think Congress has heard a lot of anecdotal reports on this. And I think they're willing to try to take some action, whether or not they're able to pull this off. And I'm talking about Congress able to pull off that Amazon has to divest their private label business when you've got Costco with a massive private label business. Target has been like crushing it in private label. Walmart's got private label. There's all these brands that have private label. Now they operate a little bit differently than Amazon, since Amazon's almost exclusively e-commerce, and they use the data and things like that to be somewhat anti-competitive. But the same thing happens in a store, okay? Target has data on what sells in its store, and they create products that maybe undercut competitors, take away shelf space from competitors. I don't know how this will work, but we'll see what happens. But as we saw this week, Amazon stock performed really nicely. And I'm going to talk about another bit of their business that could potentially be spun out. I think investors are starting to think, well, wait, if this stuff does happen, they have to divest their private label, they have to divest or spin off AWS. Well, maybe Amazon, the sum of the parts of Amazon could be worth way more than what the stock price is. I'm not saying that's what drove the stock price up this week, but it could be. So Amazon is bidding for top French soccer rights. Looks like about $363 million a year. And when you do $100 billion in a quarter in revenue, $363 million is basically a drop in the bucket. It just shows, we talked about last week or the week before, how Amazon bought MGM, the studio, with James Bond and a lot of TV shows and things like that. Amazon just wants to get further into the TV. And so I think, or like video streaming. And so I think this has some implications for a Netflix, not necessarily for a Disney, but some of these other players out there. If the streaming markets remain as competitive as it is, Amazon could take market share from those people. Now, Amazon's facing a potential $425 million fine for EU data violations. This is ultimately what a lot of this stuff from Congress, the EU, the governments around the world, this is ultimately what they want. They don't really care. Amazon donates a lot of money to a lot of these politicians anyways. They just want more money. And so they're facing a $425 million fine, which I think was about 2% of their net income. Amazon obviously doesn't retain a lot of earnings. Okay, they reinvest in the business. They probably could have more net income if they wanted to. And as a shareholder, I don't really want them to. But a $425 million fine, it's not necessarily chump change. And you better believe there's politicians all over the world, including here in the United States, it's looking at $425 million, and they want a piece of that too, so expect more of those down the road. Amazon fields bids to replace JP Morgan's for its co-branded credit card. Thought this was interesting. So if you're like me, you've got this JP Morgan Chase card that gives you 5% off on Amazon. Occasionally they run other promos on there where you get actually pretty good cash back on this thing. Well, JP Morgan is maybe looking to part with that portfolio of business, and maybe you've got American Express, maybe you got a Citigroup, maybe Synchrony Financial, maybe someone else will change. So we'll see what happens there. Now, Amazon will offer a 6-month prescriptions for as low as $6. We're seeing Amazon really push into other parts of the business. This is why I love being an Amazon shareholder, because they push the envelope, okay? And sometimes not necessarily something I agree with. Like last week, we were talking about that sidewalk where they were doing Wi-Fi. They were basically pairing your Alexa devices and sharing the Wi-Fi. I wouldn't necessarily want to do that. I don't think that's that great of an idea from an optics standpoint and maybe from a legality standpoint, but Amazon's willing to push the envelope. So I actually respect that, and I kind of like that. Now, here they are pushing for prescriptions for as low as $6. There's other pharmacies out there that offer similar discounts, so Amazon's just kind of getting into a space that really actually already exists. Now, here's what's interesting. Amazon Web Services, AWS, could count as a separate company under the G7 tax deal. So apparently all the major politicians are spending our tax dollars to have a vacation, and they're meeting at this G7 summit. And one thing they're talking about is this global minimum tax. And I won't get on this. I think you can probably imagine how I feel about a global minimum tax, especially when there's talks about exempting certain countries like China from it. I'll let you decide how I might feel about that. But put that all aside, what's interesting is because AWS is such a large business, it could be counted as a separate business, and it might create some accounting things, but it might mean that maybe Amazon has to spin that out. Amazon.com has to spin out AWS. And for me, a shareholder, that might actually create a lot of value. So we'll see what happens there as we get more and more regulation kind of churning through the system. Since these politicians, they ain't passing nothing, okay? And so they're going to have to, churn out some interests, churn out some votes some other way. So we'll see what happens down the road. Now, moving on to Netflix, start of the week at $4.91. Just slid sideways, about $4.80, $4.89 or so. Now, this was interesting. So Netflix rolls out a shop to sell products tied to its streaming title. So we talked about this broadly on the show, where what's Netflix's next move? I don't think this is a big move. Okay, this is not going to, you're not going to tangibly notice the revenue from this on Netflix's earnings anytime soon, but maybe in the future you might see a little bit. But Netflix.shop is dropping exclusive limited editions of carefully selected high quality apparel and lifestyle products tied to our shows and brand on a regular basis. So I think this is cool. Obviously you can do it with Disney. My kids watch Cars and all this Disney stuff, and then they want to go and buy the cars and they want to buy the toys that they see on there. Okay, Netflix can do that as well. They've got their own brand, their own shows, that type of things. This is just a natural extension to this. What's that next extension? Video games, maybe even like a Netflix theme park or something. Maybe they just go full on, just copy what Disney is doing. We'll see if Netflix is able to do that. Moving on to Google, start of the week at 2,392, ended the week at 2,430. Just want to make note, I am quoting GOOGL for no particular reason other than this is the shares that I own. There's GOOG. So when I quote prices for GOOGL, there's a delta between the two prices. Just want to point that out. A commenter made me aware of that on the last video that we did. But Google had a nice week. Ohio, this is interesting. Ohio is looking to have Google declared a public utility. Okay, just like, I guess, PG&E, maybe even like a telecom or something like that. And what they're arguing is the same argument we hear all the time with these politicians. And look, they have a lot of merit. I'm not saying that this argument doesn't have any validity, but they say basically that Google has to offer sources of competitors equal to its own, meaning it should not prioritize the placement of its own products. We're talking about Google services and websites on its search result pages. So like when you search for a video on Google, you are going to just get YouTube, okay? There's not a lot of other video sites out there that are probably very well positioned to capitalize, but there's other things as well that Google owns, their own shopping product on there. I think they might even own OpenTable and those types of things. Google just kind of funnels you into their own products, and competitors feel that can be anti-competitive or force them to buy ads to pay Google to get to the top of the search results. We'll see if Ohio has any luck with that move. Now, moving on to Microsoft, started the week at 251. This one has melted higher. I know on the last two shows that we've done on the FAANG Stock Recap Show, I've talked about Facebook, I've talked about Microsoft, and I talked about Tesla. And when we get over the stock charts, we'll talk about how the price actions, but those three stocks look like, to me, they wanted to do something. And Microsoft actually melted up really nicely this week. So we'll see what happens when we get over the stock chart on this one. Microsoft is bringing, this is cool, Xbox Game Pass to TVs, plans on a game streaming stick. The details around this was fairly thin, but it looks like, you got one of them smart TVs. And mine, you can go to YouTube, you can go to Hulu on your own TV. You don't need an Apple TV or something like that if you don't want to. But they're also thinking about the streaming stick. So it's like a stick that you plug in there and it allows you to play video games and those types of things, I think it could be a popular product. We'll see how Xbox rolls that out. Now, moving on to Tesla. Start of the week at $589, melted up nicely. Not there yet. Okay, when we get to the stock chart with Tesla, we'll talk about the price action. I know we went up, about $10 in share price. Not quite out of the woods where this thing could go up or down, but going up this week was nice. Now, Tesla drew positive reviews for their Model S event. I actually watched this, or part of it. It made me want to go out and buy one of these cars. If I didn't have 2 kids in car seats, I might get one of these. I think they're like 100 and something thousand. So it's a pretty expensive car, but you're leasing a car like that. You're not trying to buy a car that costs $100,000. And then if you have a business and those types of things, you can write that off a little bit and get a little bit of that money back. So it's not quite as expensive as it seems on the surface. But I like this car, this Model S. It makes me excited actually for the truck. So the Cybertruck I've got a pre-order on. And it just makes me excited for that, because Tesla likes to kind of, say, here's the Cybertruck, or here's this Model S. And when it comes out, it has all these other improvements that you didn't really think about. And that, yes, you get the general idea what the car is going to be, but then they announce all these other really cool features inside the car. And so we'll see what happens. I think Elon Musk said something about how they could produce 1,000 of these a week, like 1,000 a week. That's a lot. Okay. That's a lot of cars. And we'll see if they're able to sell that many. I can imagine that these will be very popular vehicles. I know 100,000 probably fully optioned out. These are probably $120,000, $130,000 cars. But look, out here in California, $130,000 car, I don't want to say that it's a big market, but there's a large enough market that these things will sell. Now, China is Tesla's kind of bread and butter, or at least that they hope for. EV deliveries soared 29% in May. I think there were some rumors here that it didn't go as well in China last month, but that obviously not the case. In April, they sold 25,845 vehicles. And in the most recent month, they sold 33,463. That is 29% growth, not year over year, month over month. And so it's showing strong demand for Tesla vehicles in China. Let's kick things off on the stock charts here. Let's start things off with Facebook. So if you're a regular here on the show, we're right at this critical level. And I tell you what, we busted up over it. Okay, we talked about how this level right at about 330, give or take $1 or $2, was a key level. We busted up above it earlier in the week, and it got all the way up to about 338 earlier in the week. And I was thinking, ooh, this thing could be off to the races, okay, because these are all-time highs for Facebook, okay, and when you push up above all-time highs, there is nothing up here, okay? There's no data to support that sellers will step in here, okay? And sometimes the momentum players come in and can shoot this thing up, but the stock sold off a little bit. We're sitting right here on 330 again. So it could be that we popped up above it. Now 330 is support, and then we continue this momentum. Look, this uptrend that we've made really over since the middle of March is still intact, and is still intact until we break down below it. Even though we're kind of hovering on some support here at 330, this uptrend is still intact, and I would anticipate this stock to move higher if you can break above 335, 337, 338, somewhere in that range. You're looking for a pretty strong break up above that. Now, we did have that big green candle, but this thing didn't follow through. So we'll see if Facebook's able to do that heading into next week. Now, moving on to Apple. Smack dab right in the middle of the range. Okay, we've been sideways on this stock for nearly a year. Okay, yeah, it's traded down below, traded up above for just briefly, but for the most part, we've been trading between 119, 120, and 135 on this one. Okay, now the momentum looks like it wants to bring us back up to 135. Whether or not you want to sell at that time, I'll let you decide, but basically right in the middle of the range with Apple, and until further notice, you're looking for a strong break. I'm talking about really strong break above 135 on this one, or you're looking for a break down below 119. A break below 119 would trigger the I want to buy this stock. Maybe even coming back to 119 could trigger that you want to buy that. If you've already somewhat overweight Apple, you're looking for a strong break below 119 because it would bring 110 and even 105, maybe even 100 back into play on this one. The broader markets will be pulling back at that time, but it could make Apple a pretty strong buy at that time. Also, keep in mind the company has like a $90 billion stock buyback, and so it could create a very nice bed of support underneath this stock. And if you can get some momentum on this thing, that thing could rally pretty hard. Now, I accidentally just closed my Amazon chart, so give me a second. I'll bring back up Amazon. Amazon, like we talked about, had all that news this week, and the stock actually performed very, very well. So I want to zoom this out to you, and it's similar to what we're seeing with Apple. We've basically been sideways in this thing for almost dead on a year now. Okay, we've been sideways for a while, but we had a big week here this week where we went from about 3,200 up to 3,345. So can we come up to the upper end of this range? What we're looking for with Amazon is a break above 350 or so, 3,550. We're looking for a break above that. Okay, that's these all-time highs that we literally stuck our head on 2 different times over the last year, but have not been able to break above that. So as we approach 3,555 on Amazon, it could be a selling opportunity. You want to get out of your shares, you want to diversify, whatever it is, that could be a spot. Now you're looking for, if you're longer term, you're looking for a break above that. And then obviously you're in kind of Facebook territory, and even where Google has been over the last, call it 6 months or so, where the momentum could take force and this thing could just go higher. Now on the bearish side, or if you want to buy the dip side, you're looking for really a break below 3,000 on this one. Okay, you touch 3,000, that could be a buying opportunity. A break below 3,000, 2,900 on the dot has been a very reliable buying opportunity for this stock over the last year or so. Now, moving on to Netflix, same story here. I mean, I sound like a broken record. We have been sideways on this thing for a year. Okay, just to be honest with you, FAANG has just been sideways. Now, some other parts of the market have been kind of outperforming. You had commodities have just been absolutely on fire. Some value stocks have been doing pretty well. Obviously, the meme stocks have just been going crazy, but that's kind of its own asset class at this point. You also had like financials have done really well, and commodities, oil, energy, that type of thing has been doing really well. This is why, even though I talk about FAANG and I talk about how I'm certainly overweight a lot of these names, a large percentage of my stock portfolio is tied up in these names, I don't ignore the banks. I know we do it here on the show. We don't talk about the banks and stuff like that. But if you have a nicely diversified portfolio, you still have nice performance. Also, when these high quality names go sideways, it can be an opportunity to pick them up. I've been able to pick up more shares of Apple. I've been able to pick up more shares of Microsoft and some of these other names as well. So Netflix trading towards the bottom end of the range. I wouldn't really get excited about this one unless it came down to about 470. That is another, about $18 where the stock is. But if it breaks 470, it could come down. I mean, it could come down to the 420 range or something like that. And so I'm carefully watching Netflix. It's the one stock out of all these that I don't own, and the one that I'm not particularly interested in owning. Not for any other reason other than I'm kind of overweight a lot of these. And I also feel that Netflix is kind of one-dimensional. I'm waiting for that second, third dimension like you have with Google, where I know they're one-dimensional in terms of advertising, but they've got search, they've got video, they've got other products out there as well. They got Android and things like that. So moving on to Google. Look, I know this is super sophisticated technical analysis. We've been locked in an uptrend since that is September. This thing is just staircasing up, and this is what you're looking for with it. This is why we talk about with like Facebook, like a break above. Okay, you're looking for that type of move. You're also looking for Apple and Amazon to eventually maybe have this type of move as well, because once you break above all-time highs and you can keep that momentum, this stock, like I said, back in September, October last year was 1,400, and now it's bolted on over $1,000 per share. It's up at $2,400. So that's the type of momentum that you want to have. And that's why I strongly suggest kind of buying and holding these stocks, even though some of them have gone sideways for a year. Boy, if you miss this move in Google, you missed a big money-making opportunity. And look, that uptrend with Google is intact until it's not. So we'll see what happens there. Now, Microsoft, similar situation that Facebook is in. We're looking for a break above these highs here at 2060, 2061, somewhere in there. Could be even a little bit higher. You probably could push this all the way up to about 2063 or so, but it's inching its way up there. I also have this uptrend here. This uptrend's really been intact. You probably could take it all the way back to here. Really, it's almost like Google. It's not as steep as an uptrend, okay? Google's is far more steep than this, but Microsoft is just slowly churning up. But it is reaching kind of a critical area here where we need to break above these highs. Same thing happened here. Notice that Microsoft was in an uptrend, okay? And then it topped out here and failed, consolidated, but then boom, busted up above. That was the 240 range. It went from 240 up to 260 in a matter of days. And now we've pulled back. We're looking for the same type of thing here. We're looking for a break above 260, 265, somewhere in that range, looking for a solid break, because boy, if you can break above 260 on this one, tell you what, 275, 280s in play, but this uptrend is intact and it is a very firm uptrend in my opinion. Now, moving on to Tesla. This one, also, like we've talked about here on the show, we're just kind of waiting on this one. I know it's sometimes frustrating. This is probably the third week, maybe even the fourth week where we talked about how we're just waiting. But sometimes that's the stock market, okay? Yeah, I know it's exciting, like Dogecoin and AMC stock and GameStop. These things move 30, 40% in a day. And by all means, if you want to play in that type of action, by all means, go ahead and get in there and do that. But that's not normal. It's not typical. And also it's very volatile and it's very unpredictable, I believe, to a certain degree. I think if you really devote time to it, you probably can become an expert in this. But what I love here is this setup we got going on with Tesla. And it's not that I think this is going to break. I'm not 100% confident this is going to break up and then go retest all these all-time highs. This thing has the setup of wanting to go one way or another. We are still in a downtrend, okay? This downtrend since basically January is intact, okay? And we got to get above about 640, maybe even, I would call it even 650 on this stock before I'd say the downtrend might be over, okay? You'd want a big green candle up above, maybe a back test back down, and then a back up above 650 or wherever it kind of topped out on the green candle breakout. So that's what we're looking for with Tesla. Okay, we're either looking for a breakout, and I'm throwing numbers out here. These are just kind of estimates. I'm looking for a green candle up into the 650 area. Then I'd look for a kind of a sell-off, okay? And maybe a retest of this trend line and then back up above 650. You do that, that would be very healthy in my opinion. And I think easily 700s in play, maybe even 750. And we're talking about probably within a matter of days or weeks that that type of move could happen. Now, the other scenario that we've talked about is this downtrend just stays intact and we break below 550, okay? You break below 550 in this one, and anywhere between 500 and 400 is in play. You break down here between 4 and 500, I'm almost 100% buying a share or two of Tesla in my IRA account, and I might even clear out some in a trading account because I think it could be a nice trade setup as well. You could catch it down here in the 450 to 4 range and play it back up to 550, okay? And maybe put a stop loss at 350 or something like that. That's kind of how I would see that one. So hopefully you guys have a great weekend. Again, we will be back on the Saturday show. It was delayed last week. I was at the US Open. A friend of mine was doing pretty darn good in there. She really did well. So we'll see what happens tomorrow on the Saturday show. We'll talk about crypto. We'll talk about inflation. We'll talk about like the CPI numbers. We'll talk about economic data coming into the next week. If you like the format of this show, I think you'll like our Saturday show as well. Hopefully you guys had a great week and a great weekend. We'll be back again soon with more videos. Good luck with your investments.